Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Currently, the Australian dollar is gaining further ground. Since rebounding off the 2-month low, we're now into the third consecutive day as it challenges this 60-day moving average, somewhere around 65.90 to 66.15. We do need to see a New York close above this level to support or reinstate the potential upside gains to around 67 2025. And if so, the market will strengthen from the technical aspect. So do keep an eye on the New York close tomorrow. If it's above that level of 65.90 to 66.15, then we should see the top side reinstated with any pullbacks view support around 65.45 and the key base seen at 65.10.15. Looking at the euro, the market still maintains above this key point, which is seen as the broad uptrend, that is from 108.35.45. Viewing this week's economic calendar, investors are closely watching the ECB, or the European Central Bank's monetary policy meeting on January 25th, where the bank is expected to keep its current interest rates unchanged. Along with that, investors are also keeping an eye on the fourth quarter US GDP and personal consumption expenditures, or the PCE, which is the US Federal Reserve's preferred measure of inflation, which could fuel bets on a March Federal Reserve rate cut. Presently, the US Federal Reserve has forecasted around 3 to 6 rate cuts this year. However, better than expected job growth and retail sales have eased the pressure on the Fed to reduce rates early. Nevertheless, traders have anticipated a 25 rate cut, but this has decreased somewhat since the view in December. Fed's monetary policy 2-day decision is on January 30-31. So viewing the technicals, they are firming and therefore should see a further upside move, which could actually see the market clear the level of 109.25 and move on to 109.65, and with the objective holding at 110.45.55. After a volatile week, investors now turn the attention to Tuesday's Bank of Japan's monetary policy decision. The latest inflation figures from Japan has decreased the likelihood of the Bank of Japan exiting the negative interest rates after December's annual inflation rate dropped from 2.8 to 2.6, while the core inflation rate softened from 2.5 to 2.3. Besides the Bank of Japan, investors are also keeping an eye, of course, on the US Federal Reserve's preferred inflation gauge, the PCE, or the personal consumption expenditure. Looking at the technicals though, the top side still seems to be holding around 148.35, and a break at 147.50 should ignite the downside move and reopen the case to 146.60 and likely to 145.80 and reassess. Viewing sterling, the market was a bit mixed after the release of the data by the Office for National Statistics, or the ONS, which revealed a sharp decline in UK retail sales on Friday. The figures showed a staggering negative 3.2 month-over-month decline. Given this data, the Bank of England will need to be cautious in its monetary policy to avoid a recession while keeping a tight monetary policy. Viewing the UK docket, well, we've got reports out on flash manufacturing PMI and flash services PMI. Viewing the technicals though, I'm still holding the view up to 128 figure 30, and any pullback should be shallow, and support seen firm around 126.10.15. The demand for safe haven assets will likely continue this week as the rising tension in the Middle East did spark further interest in the precious yellow metal. However, the dollar index, which measures the greenback strength against a basket of 6 major currencies, still sits around 103.30 and has been lackluster for some time. Still, we might see a little bit more movement in the US dollar once we get the releases of the US GDP and the personal consumption expenditures, or the PCE. Looking at the current pattern, well, we have closed above the level of 2026 and therefore could see further gains. That supports a move to 2033 and maybe up to 2041 to 42, with a cap seen at 2054-58. Any pullback? Well, the market should find good support around the base of 2000 and immediate support around 14 to 21. Wrapping up with oil, well, the market was mixed once again. We're still moving sideways. And if you note, you can actually start to see a trend forming here, which could see the support holding somewhere around 70.5. And finding demand there should see a rise with the objective holding at 75.5 to 75. Well, that's a wrap. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to the new week.